Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market update. Hope everybody had a beautiful day of trading. And in today's markets, guys, we finally got a little bit of green, but most of that happened in the last hour of trading. And that's been a common theme over the course of this shortened trading week, with the Friday session being a holiday. Take a look at the trading today on SPY. Both QQQ and SPY were pretty much the same. We're going to use SPY for this example, but for the most part, fairly muted day as a whole. This was really in line with yesterday's trading action as well, and Monday's too, to where most of the day we do pretty much nothing, and then the end of the day we get significant moves. Today was to the upside, yesterday was to the downside, but just goes to show, guys, on low volume days, holiday weeks, weeks with not a lot of macro, keep in mind we don't really have much in the terms of news much before tomorrow where we get the GDP numbers, and then Friday on the holiday while the markets are closed, we're going to be getting another inflation report, the PCE report. As a whole, guys, slow week, and we were closely monitoring this bull flag for potential continuation, and seems as though the bulls are now starting to play ball. So in today's video, guys, we're going to take a look at our major technical analysis on our indexes and then we're obviously going to cover our major tech names, and we are not going to cover the portfolio for today. I figured I should leave that for tomorrow just to wrap up the week with all the trades that I've made, but I will tell you guys which trades. There's only one really that I made today, and that was on CELH, so we'll probably cover that towards the end of the video. So without further ado, guys, let's get right into it. We're going to start it off with our technical analysis rundown here on your major indexes. So as we were saying, we were monitoring this daily uptrend, and the last 4 red days were presenting a beautiful bull flag opportunity coming down into our support zone, this green box right here, coming down into your 12 EMA, and now really starting to move higher. So SPY, we're going to be looking for a break of about 524.30. That is really going to send our daily uptrend here into its next leg up, and at that point we'll be targeting the top end of the trend line, which currently sits around 534, 535. All in all, guys, the bulls in complete control, especially after this afternoon, really doing a great job of creating the space on the hourly to potentially get this hourly trend change going and get our daily leg up moving. Everything is looking absolutely gorgeous, guys. Take a look at the heat map as well. It was a broad market rally day, right? Everything pretty much in the green, except for a few of your major tech names. Microsoft, Oracle, Adobe, Palo Alto, some of your names that were red. Netflix also not having a great day, 2.5% down. And then you had a few semiconductors, not all of them, but NVIDIA, AVGO heading to the downside. Not that much downside as a whole, guys. The market was extremely broad-based and extremely healthy in its rally today. And it's not only in the last hour of trading here, guys. Pretty much over the course of the day, even though QQQ was red, about 90% of the market was green all throughout the day. QQQ really played catch up in the last hour of the day. Apple with some nice outperformance here. On the one-day relative, you can see that even better. Everything getting a little bump here, namely utilities and real estate. So we didn't have that much of a drop in yields here today, guys. Take a look at your 20-year yields, basically pretty much moving flat on the day, right? Well, actually, as a matter of fact, down about 1%. The 10-year yields down about 1% as well, but not that much movement to warrant such a big phenomenal rise in your interest rate sensitive sectors such as real estate, utilities, electric vehicles, and solar plays. But all of those doing phenomenally well. Even your solar plays here, guys. CSIQ, the one that I was in for a while, they were up 7% on the day. Even a larger company, the likes of Enphase, was up almost 10% on the day. So really coming back, nothing was being left behind today. So very nice day of broad market rally. Now let's move into QQQ. QQQ, the analysis was roughly the same. We were looking for the potential resumption of a daily uptrend here, looking down to our support levels, the 12 EMA and the 26, and the bottom end of the trend line was pretty much the last stop for bulls to put in a stand to potentially get the increase here. You can see it better on the NASDAQ, right? We're really sitting above our previous resistance area. The last 5 days, we've been unable to break that to the downside, and now it does appear as though bulls want to go for that next leg higher. Bears just not able to get the job done. So QQQ still in the context here of of a gorgeous weekly uptrend, right? And now we're just going to be looking for that follow through. Can they get it done over the course of the day in terms of your tech bulls into tomorrow? If we do get that daily uptrend underway, that would be a break of your 449 level right there. And we're going to be targeting the top end of the trend line, which currently sits around $465. So everything looking very, very good. The red flags, guys, obviously only appear if we start breaking down towards the bottom end of the trend line here, down into our support area here, and lose this, right? That is when the red flag appears, where you could get some weekly follow through to the downside. But as of now, there's really no indication of that just yet. Now, moving on to financials. Financials having an extremely good day, 1.18% to the upside, and really within the context of this gorgeous daily uptrend, right? What we were talking about the last couple of days on financials consolidation is the bulls created so much space on this leg right here that any move lower, just looking for a daily higher low, anything above 40.5, daily higher low, and further trend continuation. The bulls appearing to want to get that daily continuation underway immediately, pretty much. Now we're going a little bit higher. It seems we're now well above our all-time highs. And if we close a weekly candle like this, guys, I would not be surprised if next week we really start breaking in to those $42, $43 levels. Very impressive move by financials. One of your strongest bullish sectors as a whole over the course of the last month. So no red flags as of yet. Keep a close eye on your most recent higher low, 41.25. If you lose that to the downside, the daily downtrend starts, and then you might be in for some weekly consolidation. But as of now, no signs of it yet. Your bulls maintain full control of absolutely everything. Now, moving on to healthcare. We were monitoring very closely this tight price action here towards the downside, right? We were keeping a close eye on this level right here, this yellow line, which was our last line of defense in terms of support. And that was sitting about 144.70, let's call it, right? Well, now the bulls really engulfing this move, new daily uptrend, and targeting the higher end of this range right now, 148.27. We're almost there, and that would be new all-time highs for continuation. Excuse me. What we're looking for here, guys, we've been saying it now for a few weeks in a row, to where this little pullback right here was a weekly bull flag looking for further continuation. Why? Because your monthly leg has just not stopped as of yet. So the bulls are in full control of this chart. I would be highly surprised, guys, if the bulls are unable to crack this within the next few days of trading. Momentum is extremely good. You have your MACD down here, obviously wanting to cross to the upside now. So the start of this daily new leg is most likely underway. We're going to be looking to mount above the 148. Healthcare just maintains an extremely strong sector. Despite its sideways consolidation for the past 4 or 5 weeks, the market was able to run all the same, even if one of the major sectors was pulling back here. So if we get a little bit of relative weakness in financials and QQQ, I do believe healthcare will be there to make up for it, which will keep your SPY bulls in full control. The rotation between these three sectors, guys, is the most important thing that I look at on a daily basis. Now, moving on to IWM Russell. IWM Russell having an amazing day today, 2.18% to the upside, and that was largely due to one of their major components, KRE, right? The small and medium regional banks, and they had an amazing day, 3.7% to the upside. That sector represents about 18% of the weight in the Russell. So that is one of your major reasons that this sector ran hard today. Daily uptrend restarted by the bulls at this point. Now that we have a new daily uptrend here, guys, your weekly higher lows are officially set right down here at about $200 on to potentially leg number 3 for the Russell. Overhead resistance targets, guys, currently sit your first line of defense right now for the bears is going to be your 212. Very, very big area, right? This whole bottom of your prior range, 2021, 2022, that is the range that we're going to start coming into right about now. So normal, we're encountering a little bit of resistance. The next area of supply or resistance is going to be your overhead level of this range, starting at about 227, going all the way as high as about 232. So this whole pocket right here. So when we get into this zone, guys, it may be a little bit choppy, but looking like a beautiful breakout trade nonetheless. No red flags for the Russell currently. I'm just a little bit disappointed here that it didn't come and get me. I really wanted to pick this thing up in the mid 190s. Looks as though I will have to wait for that one. It's kind of left without me. We did have a beautiful breakout retest, but we didn't retest this range too much, only retesting the top end of our red box. which was previous resistance, right? Still, it was there for pretty much the past 2 weeks. Now we are moving on higher. So keep a close eye, guys, on your 212 level. That will be really the big one to mount above in the near-term future. And now lastly, our Dow Jones. Dow Jones performing excessively well here today, 1.22% to the upside. And the Dow Jones never was in jeopardy of losing anything, really. You can see here this gorgeous, gorgeous, gorgeous breakout of your previous resistance, and retesting at a support, retesting the moving averages as well. And now we are on to run. So this was pretty much all the same setup, right? Pretty much the breakout and retest trade. It was like that on the Dow Jones. It was like that on the SPY as well, breakout, retest, right? And it was like that in a few other key sectors as well. Financials did this as well. So that is what we're looking for here, guys, on the Dow Jones. The breakout retest is now complete. We're going to be targeting all-time highs, 39,900. And then obviously our next target, because we have no more resistance, we're at the all-time highs, is going to be your round 40,000 point mark for the Dow Jones. We are extremely, extremely close to that. Could be possible to really crack that here in the next couple of days. Looking very good. And obviously to the downside, guys, what are we looking out for to get a bit of red flags is going to be a loss of this level, 39,200. Lose this without making a new high. You end up in a daily downtrend. Then we'll be looking to these lows. And if that manifests, we'll be looking for a weekly consolidation. But as of now, no signs of that yet. So we'll keep an eye on this. We'll look at it one day at a time, guys. That is pretty much the recap for the indexes. And just to make a quick little tidbit, right? Quick little note. Now, in terms of the fact that over the past couple of weeks, 2-3 weeks up leading into Jerome Powell, I was relatively bearish on the markets because I deemed that if we were going to get a negative catalyst for a sell-off, it was most likely going to come from Jerome Powell. Now, obviously, Jerome Powell came out and basically green-lighted the entire bull market, said that they didn't care about about inflation coming in hotter than expected in January and February because the overall trend of inflation over the last 6 and 12 months has been netly down. Financial conditions are obviously good too. The economy is good and the jobs market is healthy as well. So what are a few little things that we need to look out for, guys? We're not getting complacent here, right? We understand that for the past 4 or 5 months at this point, the markets have essentially come straight up. You can see it on the monthly, you can see it on the weekly, right? And greed is also somewhat elevated right now too. So if we do get a pullback here, guys, it's very unlikely that the pullback is going to come from some specific data points, right? Unless tomorrow GDP comes in disastrous, which nobody is expecting, and unless the PCE inflation report on Friday also comes in disastrous, which no one is expecting to, well, your bulls are most likely going to be able to just grind this market higher. However, we may come into a point where we get a little bit of a technical sell-off. Keep in mind, guys, I've pointed this out for a while. Usually markets don't move up in a straight line. Even in your best bull markets, right? You can go back to 2020 if you want, 2020, 2021. That was a very nice bull rally. You can go prior to the pandemic as well. And you will see that even though sometimes we mount 3-4 month rallies in a row, you do eventually get technical pullbacks that usually range between 5 and 6% on SPY and a little bit more on QQQ. You can see it in 2020, 2021 as well, right? Few little 5, 6, 7% pullbacks all throughout the year in the context of an overall uptrend. So far this year, we really haven't had that since the November rally. The most pullbacks you've ever gotten was 2% here, another 2% there. Not much indeed, right? So we could be due potentially for a larger form pullback, but there will be warning signs of this, right? First of all, we need to lose the daily uptrend. That's sign number one. And then when you complement the loss of the daily uptrend with also a loss of your major trend lines, well, then you know that the sell-off is real and that we may be in for a few weeks up to a month's worth of pain. But so far, guys, the short-term catalysts and the short-term price action just don't show that at all. So rather than just perpetually waiting for a market sell-off, we have to stick to who's in control. The long-term bulls, the monthly, the weekly, and at this point, the daily now as well. The bulls are in absolute full control until I see some warning signs of losing daily uptrends in our major indexes, QQQ, XLF, XLV. The massive sell-off is just not going to happen overnight. obviously, unless we get hit with some black swan event, right? But considering the fact that everything else stays relatively normal, the economy maintains normal levels, unemployment maintains relatively normal levels, and inflation reports hover still around the, mid 2% to mid 3% range, I don't think it's going to move the needle much on this market, guys. So we're going to keep a close eye on a potential sell-off opportunity over the next couple of weeks. But as of right now, the bulls are in complete control. And you guys know me, I'm on top of this a lot. If there are any warning signs, I will point them out on the channel. But as of now, we're just not seeing them at all. Now let's take a quick look at yields. So yields also just kind of maintaining this relative range here. The 20-year is currently stuck around the 4.5% mark. Since rates are going to be higher for longer, guys, I really don't see an immediate need for this chart to really start falling off a cliff, right? That will probably happen as we get closer to the first rate cut in May and June. So can we just maintain a relative range here on the 20-year between 4.6 and 4.2? Most likely we can here, guys. There's really not much, until we get some inflation reports that really show that inflation is crashing under 2%, it's not going to move this needle that much. And until the Fed actually starts decreasing interest rates, it's also not really going to move the needle this much. So I am interested in going, short yields, aka long bonds such as TLT. But as of now, there's just no urgency that screams out to me that I need to take this trade right now. So that's why I'm kind of sitting this one out. But yields as a whole, guys, not looking bad, not looking good, just kind of really hovering here. Not much momentum whatsoever in either or direction. Now, crypto hasn't moved as well, but we'll do a quick little check in on crypto too right now. So crypto, as a whole, guys, your bulls still maintain full control. Now, in Bitcoin and in Ethereum, we'll take a look at that after. We are in the context of a daily uptrend. And if we're looking for a higher low here, guys, target this area right here on Bitcoin, talking about 66,000, right? That's when we really start getting in this big previous all-time high range. In my opinion, it's going to be excessively tough for the bears to take back much more than that. As of now, your bulls are in full control. We're just going to watch whenever this pullback happens. What is the size of the pullback in relation to the most recent higher low? 62,334. If it is a shallow pullback, gets rejected here, and the hourly trend starts curling up again, then you're most likely going to get daily continuation here. The weekly bulls are obviously in full control as well of this weekly uptrend right now. The next target for me personally, guys, you have to go with psychological numbers at this point. So the first one's going to be about 75,000, and then it's pretty much going to be your 100K. So as of now, crypto looking very solid indeed. And all while Bitcoin is kind of hovering around its all-time highs, there's been crazy rotation in a lot of your top tier altcoins here. So moving on to Ethereum, and guys, let me know, right? Because I'm heavily involved in crypto as well. I know I don't show it that much on the channel, but I am deeply involved in crypto as well. Not only in Bitcoin and Ethereum, but also a lot of altcoins, not only your secondary major altcoins, stuff like Aptos, stuff like Chainlink, of course, is one of my favorite plays for this current cycle as well. So not only are we taking a look at most of all these secondary altcoins, obviously Solana too, but I have an entire list that I never show on the channel really of your current narrative plays, right? The top ones in gaming, GambleFi, right? Game studios themselves, specific games, because the gaming narrative in crypto is extremely hot, and also AI coins, right? AI coins, your real world asset coins, the RWA coins that are coming out recently. So there's just, DPIN as well. I'm heavily involved in a few DPIN names. So if any of that interests you, should I be releasing any more crypto specific videos, just let me know and I'll start covering that topic more aggressively. But I know the crypto space is a very polarizing space, right? So just let me know if you would be interested in me covering a few of these more specifically, guys. And I will be happy to do that for everybody. Now let's take a look at Ethereum as well. So Ethereum as well, looking very good. Daily uptrend is started anew. We're just going to be keeping a close eye on our most recent higher lows. 3260 is the mark for that. So as of now, daily uptrend is being maintained, trying to defend as of today, right? The moving averages too. If for ever which reason we lose these here, guys, well, your weekly consolidation will just continue in Ethereum, all the same as Bitcoin, as we just saw. And Ethereum is coming into a very big level as well here, guys, right? Your 3,000 all the way down to about 2,700 is an extremely juicy area. I know it's a wide range, right? About a 10% range, but crypto is relatively volatile. I don't see the bears being able to take much more than that back specifically. So Ethereum looking very good. The bulls bulls now back in short-term control of your daily, never lost the weekly, still just looking for your daily high or low above 2174 here, and the monthly bulls, obviously everybody is still in full control here. So crypto looking excessively good when your major coins are in sideways consolidation mode here, guys, right? You see some of your major crypto names are slightly down on the day. Well, you have a lot of decent outperformance sometimes in a lot of your smaller tokens. I know this entire list is red for the day here today, but it's not an exhaustive list, of course, but there's been a lot of gains to be made, guys, in smaller crypto names while Bitcoin and Ethereum have been moving sideways. So it's been very, very fun last 2-3 weeks in crypto despite the dips. Now let's move on to our major tech names here, guys. So major tech, gonna take a look at Apple. Apple finally getting a little bit of love here, guys. No news on the day, just slight recovery from Apple. So Apple up 2.12%, very good day. One of their best days pretty much over the last, month and a half at this point, right? Looking very good, doing a great job here of protecting the lows. We were really watching out for these 169 lows because yesterday, if we would have lost those, the next line of defense would have been all the way down here at about 166. It's now good. Our daily move higher is started, right? We recaptured the hourly trend over the course of the day. So step number 1 is complete. We have our daily bounce underway. Now we have to watch for the size of the bounce. Why do we watch for the size of the bounce? Well, because we were in a daily uptrend, but we lost it to the bears, right? So now if we want to regain the daily uptrend like this, we need to see a high enough bounce that gives the bulls the best chance for when we consolidate, it makes a higher low into higher high, new daily uptrend. As of now, the size of the bounce is starting off good, but it's only about 38.2% of the move. So where do we want to see the bounce come up to? So for us to get really comfortable that most likely a daily uptrend is probably coming, well, I would love to see this move get at least as high as about 175, which would be pretty much a 62% retracement. If we get all the way back up to 177, that's really best case scenario. Almost an entirely engulfing move, creates a ton of space to set the higher low for daily trend change. So 175 all the way up to pretty much 178. That would be my target sweet spot for the bulls to hit, which will really give me the confidence that this time we're able to kind of reverse this and start taking more of this weekly move back as well. But you guys know as well, as long as Apple stays within this lower 170 range, I will continue to play it aggressively on a week-to-week basis. So looking very, very good. Great buy the dip opportunity and even swing trade opportunity on Apple specifically. Now moving on to AMD. So AMD also struggling a little bit on the day, 0.97% to the upside. But the reason I say struggling here, guys, is because we've really been trapped in this price range for a better part of the last 7 days of trading at this point. Why is it so hard to get some movement from down here? Well, we're kind of acting against two things, right? Number one, we're now back in this big area of congestion. This was an area of congestion for about 5 weeks here. Back in late January and early February. And now it's tough for the bears to gain much ground further into this zone. This whole zone is pretty much acting as big support right now. However, above us, what do we have above us? Well, the top end of this range, which is roughly the 183 mark, that is above us, acting as a bit of horizontal current resistance right now. What is also above us are your short-term moving averages. So for the bulls to really mount clearly above this, we're going to need a nice 2 or 3% day to really get some lift, right? Unless semiconductors have a little bit of a, a little bit of a run here. Semiconductors have kind of been weak for a better part of the last, 2 weeks. This is the 1 day relative. Take a look at the 1 week relative performance, right? Semiconductors really haven't been outperforming. NVIDIA kind of flat, AMD kind of flat as well. You have some decent outperformance in some other ones, of course, Micron because they had their earnings, but your larger names just kind of underperforming the market right now, but it's fine because we're in the context of massive weekly uptrends, right? So AMD bulls still looking very good. We'll see where they close the week tomorrow. Still just looking for that weekly higher low here. Anything above 160, 175 is going to be a weekly higher low for further trend continuation. So at this point, we're just really looking for that engulfing move, one candle to get us back above our big area of resistance, back above the moving averages, and then we can talk about resetting the daily uptrend because we've been in the context of this daily downtrend now for a better part of the last 3 weeks of trading, but looking good. The bulls towards the end of the day getting really tight down here. So if we can reverse this into an hourly uptrend tomorrow or Monday, it's going to be looking good here, guys, for AMD to start attacking to the upside, regaining the daily uptrend, and really giving us potentially another weak leg of upside. I understand the all-time highs are relatively far, and the bulls and the bears have taken back a lot of this move. So worst case scenario for the bulls is we end up in a little bit of a tightening range because the bears have taken back so much. May be tough to get the ultimate V shape. And company earnings are a bit too far away here for us to be looking to those to do it, right? Only on the 30th of April. Now moving on to Amazon, give me a quick second. Amazon 0.86% to the upside, looking very good here today. Amazon still trying to break above its area of 178. That 178 resistance, guys, that's been really plaguing the stock back in 2020 and 2021 is doing the same thing right now, just not allowing the buyers to get through immediately, right? Amazon actually had some decent news here today, some AI news. So Amazon adds 2.75 billion to complete 4 billion investment in AI startup Anthropic. So here's the news article. They said Wednesday they invested an additional 2.75 billion in Anthropic, completing the $4 billion deal with the artificial intelligence startup from late last year. In a deal first announced in September, Amazon committed an initial 1.25 billion to Anthropic for an investment deal worth up to 4 billion. Anthropic is the developer of the chatbot Claude. Claude competes with OpenAI's ChatGPT, which launched the generative AI craze late in 2022. The San Francisco-based Anthropic Corporation was founded by former OpenAI researchers, so they got the inside information for sure, right? Google parent company Alphabet is also an investor in Anthropic. So there was some of the news, more AI news for Amazon. Just goes to show, guys, that this company is really doing as much as it can to invest in AI because they understand that having the largest cloud network in the world, there's going to be a lot of demand to see what they can do with AI services as well. So obviously they have to protect their AWS moat right now. And the best way to do that is by getting ahead of the game in AI. Amazon also had some beautiful news last week with NVIDIA. So NVIDIA had their GTC conference last week, right? Well, they announced here's what they announced. I forgot to cover it last week, but NVIDIA's new AI computing platform, Blackwell, that was the new edition they released last week, will be available through Amazon Web Services. AWS will also host NVIDIA's DGX Cloud AI training software service. The companies are also working together on cybersecurity and an AI supercomputer. Plus, Amazon and NVIDIA announced tools to help company train AI models using their own data. So Amazon really working close with NVIDIA here, and obviously adding to their AI portfolio here in this investment through Anthropic. So looking very good here, guys. No red flags for Amazon as a business. Not only is their retail business performing excessively well this year, but their advertising division and their AWS, their Amazon web hosting services, right? In terms of their cloud data management, all their lines of business this year will outperform, which is why it's one of my favorite stocks for the entire year. They should be generating record amount of free cash flow, record amount of net profits. That's why I'm very bullish on this company. And we can see here the chart is also equally as bullish. This whole thing right here, guys, is a gigantic bull flag in my opinion. Looking extremely good for some potential continuation, guys. Sticking very, very close to this top line area of resistance, and we're now finally above it. Not clearly above it, but we are above it, so we should be able to use it as resistance now above our moving averages as well. So I really think, guys, Amazon is poised here. You know, if price action, if the rest of the market stays on course, Amazon within the next few days should have its breakout candle. And when that breakout candle happens, watch out because the next stop is your all-time highs, 188, and there's really not that much in the way of this stock up until that price point. So that would represent a very nice increase of about 5% quickly for Amazon. That's what we're looking for here. Daily bulls in full control, looking very good. Tight. Really think that this breakout is going to happen over the next couple of days. So looking good on Amazon, and weekly bulls obviously in full control as well. Beautiful weekly bull flag right here for potential future continuation. Now moving on to Google. Google also looking fairly decent here today, 0.16%, so not much, but not a bad day of trading for Google, right? Google looking very good in the context of this daily uptrend right now. Currently struggling a little bit at the highs, 153. After that, we're looking for the new highs, guys. 155.11 will be your all-time highs. If for ever which reason we lose a bit of this move here, guys, just look for a daily higher low, anything above 147.17. Just going to be looking for a daily higher low for potential further trend continuation. The bulls have done a great job here, guys, of rallying from the lows. You can see we're pretty much up 16% in about 3 weeks of trading from the lows. Very juicy trade on Google. So looking very good in that aspect. And even on the weekly here, guys, the weekly bulls have pretty much completely engulfed your most recent leg of selling. Actually, the two most recent legs of selling. I drew that a bit fast, but it really was an extended weekly downtrend here with 3 legs. Now we've engulfed pretty much 2 of those legs in one single move. So looking very good. Even if Google were to consolidate into daily downtrend here, the weekly higher lows will be an extremely juicy trade here, guys. If we pull back 145, 144, I am going for the long right here for the breakout of all-time highs over the course of this year. So Google is looking extremely good. Now moving on to Meta. Meta down about 0.41%, but still no real red flags here, guys. We're still above our previous yellow line here, which is your big area of resistance, now acting as support. We're below the 12 EMA, but we still have the support line and we have the 26 EMA. Coupled as well with your lows down here at about 482.30. So Meta, even though we've been selling off for the past 5 days, hasn't been getting much love. Really hasn't sold off much in the past 5 days, has it? Only down about 4%. Really not that much on Meta to begin with. So the chart is still looking fairly decent, if I do admit myself. We are still in the context of a daily uptrend. We'll see if the bulls can protect this. Now, if for whatever which reason we lose this, we lose the moving averages, lose the resistance, which is now support line as well, and we lose the 482s, well then the bears are going to be set up beautifully for a lower high into lower low conversion, which could mean further weekly consolidation. It's a good thing that Meta has a decent amount of space still, right? Anything pretty much about 455, just really hunting for that weekly higher low here. Looking very good, however, no red flags as of yet. If we lose 482 though, watch out, we'll take it one day at a time, because after that, there's a bit of a gap fill to be had here between the 450 all the way down to about 400 range. I'm not saying Meta is going to go all the way as low as that, but we'll watch this closely, guys, right? In terms of your levels on Meta. As of now, no red flags. Moving on to Microsoft. Microsoft looking excessively good as well. So in the context of a beautiful daily uptrend right now, just looking for a daily higher low, anything above 413. Just going to be looking for that daily higher low for further trend continuation. We have tons of areas of support, guys. The 12 EMA has been acting as defense over the last 3 days. You can see that very clearly. And a little bit lower down here at about 416 is the top end of your previous range that we can also be using as support to supplement that breakout, right? So looking very good. Microsoft has done this now twice in this past rally where we make a big move up, consolidate sideways, big move up, consolidate sideways. And I do think this new weekly leg up is well underway, just retesting the range as support. Now, Microsoft poised to have a nice little breakout in my opinion. If for whatever reason though, we dip a little bit further here, guys, down into the low 400s, like 410, 409, I may be very tempted to start some swing trade positions in the form of short puts. I don't play Microsoft that often in terms of short puts because it is a $40,000 collateral trade. I don't mind putting up the collateral, but it has to be a good trade, guys. So at that point, if we do dip down to the 410 area, I would be looking to play the 400 strikes for some short puts to generate some juicy premium on such an excellent company. Now moving on to Netflix. Netflix, guys, down 2.5%, and it did crack one of the criteria we were watching over the past month and a half, right? The fact that we'd never lost a 12 EMA since the earnings season pretty much. Well, now is the first day where we lost it. So we'll see if Netflix is able to recover that in the form of tomorrow or Monday's trading, because we're getting kind of close now, guys, to our most recent higher lows, 605. If you lose 605, you lose the daily uptrend. You'll also lose these moving averages. And at that point, it sets the bears up nicely to have lower high into lower low. They would mean daily downtrend, the first daily downtrend since pretty much your earnings were released. Actually, they had a little bit of one coming back here as well. So pretty much your first daily downtrend in over a month and a half. So it would be notable to us. Plus the loss of the moving average would be even more important, right? And then you'd be on for some weekly consolidation. Now, weekly consolidation, not too much of a problem, guys. Anything above 550, just looking for a weekly higher low for potential trend continuation. And the support levels down here, guys, are so juicy. 575, right? Going to be the 12 EMA, going to be our horizontal area. That was the top end of a big resistance zone here back in 2020 and 2021. So Netflix, even though we had a little bit of a dip here today, looking very juicy, guys. Now that we've mounted above the biggest area of resistance, in my opinion, that was really, getting this, kind of rejecting the stock back here, right? It really took the move of earnings to get us through this area right here. And I do think Netflix will just be able to continue on this gorgeous trajectory and eventually hit its all-time highs over the course of this year. The business has been performing extremely well, higher free cash flow, higher subscriber count, and everything is just moving in the right direction. So looking good. We'll monitor this one closely. One thing's for sure, if we do come down here, guys, in the 575 range, I may be tempted to play some options as well. So we'll take that one day at a time. And if we get there, I'll let you know exactly what I'm doing with it. Now moving on to NVIDIA. NVIDIA down again on the day, 2.5% to the downside. Is the NVIDIA rally over? Well, even with these two red days here, guys, not really. The bulls are still in absolute full control. Daily uptrend is still underway, and we haven't really lost a 12 EMA either. So keep an eye on these lows right down here. 850 is going to be extremely important here, guys, right? Need to protect 850 to keep the potential of that daily uptrend alive. If the bears take back too much of the move and lose this 12 EMA, it sets them up to have a chance at creating a daily downtrend, and that would be for some healthy, keyword healthy, weekly consolidation, right? It's been a gorgeous, gorgeous, gorgeous weekly uptrend. We just haven't had much weekly pullback, right? If we do get the weekly pullback, I've said the levels that I most likely think we will pull back to, and that would be pretty much down the range of $800 to about $750. Seems like a very sweet area for me. You're talking about pretty much your previous resistance prior to earnings that we came back and retested thereafter. So this whole little range right here, 800 down to the line of about 750, is a juicy, juicy area. Now, will NVIDIA get down there? Really tough to tell here, guys, because that would be an additional sell-off of 15, 16%. And NVIDIA is the type of stock where in this market, the narrative behind it is so strong that to get a 15% sell-off, well, from top to there, it would be even more, right? It would be about 22% sell-off. You can't really justify it unless you get a negative news article on the company specifically, or the rest of the market consolidates as a whole, right? I would be highly surprised if semiconductors, I know semiconductors have been hot and I know they can rotate to the downside just to cool off, but that would be a large number for NVIDIA. One thing's for sure though, if we do get down there, I will be heavily buying NVIDIA. Going to be looking to do probably some short put options to generate some premium down below here. And I may even throw a few shares at this trade as well. So NVIDIA looking very good, guys. Context is still extremely bullish. Just please keep an eye here on the 853. Not losing the 12 EMA, but if we come back down too much here, guys, towards here while losing the 12 EMA, that's when we need to be careful. We'll need to keep a close eye on the size of the bounce. And if we start rolling over on the hourly there, that's when we may get the daily follow through. At that point, I will be waiting for this trade down here, 800 to 750. Now moving on to Tesla. Tesla with a nice day today, 1.22% to the upside, but still not out of the woods here, guys, right? It's going to be very tough to derive any price action on Tesla because of the fact that they have deliveries coming out pretty much next Monday. So there's only one trading day before they release their deliveries. So they are in a daily uptrend now. Finally, we've recaptured a daily uptrend on Tesla, which means your weekly bounce is currently underway. But with such an important day, next Monday, in terms of deliveries, it's going to give us an indication, guys. Will the company be able to beat two things? Will they be able to beat revenues? And will they be able to beat on margins as well? So we'll have very nice commentary from Tesla deliveries that come out on Monday. And thereafter, 3 weeks later, we do get the earnings, or roughly 2.5 weeks after that, guys, we're going to have the company earnings. So very, very, very tough to derive price action with those two big catalysts coming out. But the bulls are in control right now. The top end that we will be targeting at this point, guys, we need to get as close as possible to 205. Get me as close as possible to 205. And then maybe if we do have a little bit of a pullback, it could create enough space for the bulls to set the weekly higher low into weekly uptrend. But that stuff takes time and would require that deliveries come in bullish and earnings also come in bullish. Because if one of those two things is a negative catalyst, guys, well, I do believe the bears are just going to continue pretty much their downtrend of this stock and maybe bring us all the way down, into the mid 150 range. For now, though, the bulls are looking good. We'll just have to keep our eyes peeled what happens next Monday. That's why I don't want to give too many price targets on this stock in the short term without that data available to me. So we'll see how Tesla plays out, but actually, having a decent little run here over the past couple of days. Now moving on to Palantir. Palantir down 1.53%, and we're kind of hesitating here. Can't really break out into full daily uptrend mode. Kind of hesitating. 2540 seems to be the line that the bulls cannot cross right now. So what are we looking to do here, guys? We're looking to get this daily uptrend back after having lost this one after cutting these lows on this move down, right? So now the bulls need to recapture this daily uptrend because we want to be trying to use this weekly momentum, right, to try and attack the higher resistance area, which currently sits around $28. If for every which reason the bears take over and flush these most recent lows, $24, it'll be new daily downtrend, and then we will look out to the weekly to provide some further support down here, guys. Potentially, even if we lose these weekly levels, 2240, I don't believe this is the most important level for Palantir at all, even on the weekly. If we were to lose this like this, guys, we're going to come down into such solid support that I don't believe the bears are going to be able to get through it, right? This whole 2150 down to about $19, this green box, big previous support, previous resistance last year as well. So if we do come back hard down into one area, that is where I do believe that the bleeding will most likely stop for Palantir. Now, kind of like this I was saying in yesterday's video, right? We're kind of trapped between two price points. We're really midway between the support level down here and the resistance line up here. So it's really, really tough to gauge right now who's in control, right? Overall context is in a nice monthly uptrend. The weekly, however, is slightly hesitating, right? You could see it right in the middle here. So weekly, although we are in the context of a weekly uptrend, the bears are taking back a lot of this move so far as well. And on the daily is just as choppy as well, right? So what I would like to see on Palantir, guys, personally for myself, is a potential breakdown here to the lower levels. I will definitely be picking up some shares. And I do think that this represents a better accumulation zone for the bulls as well. If we were to dip down here hard, it would just be for a monthly higher low and then most likely be looking to attack these with some more momentum here, guys, later on in the year. So looking very decent on Palantir. Personally, myself, I would love to have it closer, guys, to $21.50, $20, and then make the move to about 28. Taking it from here to 28 when we're right in the middle, the risk reward isn't that amazing, right? You're kind of in the middle. The risk is pretty much all the way down here, which is about a $4 move, and the reward is also about a $4 move. So it's really 1-to-1, not the type of trades that I want to take. I want it to get a little bit juicier. And now lastly, PayPal. PayPal looking somewhat decent here today, only down 0.15%. They were up considerably on the day today, but giving a lot of it back here, guys. So take a look. We were actually up on the day, close to about 2% again for PayPal. Reconsolidated towards the end of the day, but that's okay. PayPal does have a lot of room to give back. So we are in the context of this gorgeous daily uptrend right now. So any pullback, just looking for a higher low, anything above 64.82, going to be looking for the higher low for potential trend continuation at this point. PayPal is looking very, very juicy. We're above crucial areas now at this point, guys. This green line is your 200 daily moving average. We haven't been above that consistently since 2021. That's major factor number one. Major factor number two, we are above this downtrending channel line. I know I didn't place it perfectly, but you guys get the idea, right? So downtrending channel line, we're now cleanly above that for the past 3 weeks in a row. So that is breakout catalyst number two. The number three is we're now in a consistent weekly uptrend, and we are on the verge of confirming a new monthly uptrend. If we can get a break and close above 68.46 pretty much at this point, or 68.26 rather, it's going to be a confirmed monthly uptrend. I know it's not pretty, but it would be the first one since all the way back in 2021. So everything lining up beautiful for PayPal right now. One thing's for sure, if we do start challenging these lower areas, let's say we get some daily downtrends here for some extended weekly pullback, right? Just looking for the eventual weekly higher low right here. The area that I'm going to be targeting for that weekly higher low, $63, $62 seems to be an extremely attractive area. We would still be above our downtrending channel line, but we would be really close to our moving averages and to this massive support area, 62, these two yellow lines, 62 down to $60. This area of confluence is the juicy trade that I am potentially looking for here, guys. So if we do revisit these areas, these lower $63 range, that is where I'm going to be looking to make maybe a heavier play on PayPal. So everything looking fairly good. In terms of the stock news here today, guys, in terms of the ones that I was looking at, we got the same ones we've been looking at all week, right? I'm going to start building a position most likely tomorrow in your cybersecurity trade. I really like these levels in cybersecurity, guys. We've sold off a ton since the most recent highs. This is the ETF that I use, WCBR. It's the wisdom tree one that I presented on the channel roughly a month ago at this point. It just represents your top 25 cybersecurity names, and it really doesn't have a lot of big names like Microsoft or Google or anything like that. They are all pure play cybersecurity names in this. So some that have come down considerably light, right? Palo Alto still down 25% from its highs. Zscaler as well. Zscaler still down about 25% from the highs. CrowdStrike, not so much, still relatively at highs, but roughly down about 12% since their post-earnings highs. And the list just continues, guys. You know, even Datadog from their post-earnings highs down about 12% as well. So representing a very, very juicy level for breakout retests on a lot of these. Look, a lot of these charts look the same, right? On the monthly especially, right? So you got nice monthly uptrend, just retesting, looking for the monthly higher low. That's Datadog. Take a look at Zscaler. Zscaler as well, looking for the monthly higher low into a big green box area of support, coming down as well. What's that doing? What is Palo Alto Networks doing? Palo Alto, same thing. Monthly uptrend, looking for the monthly higher low for further trend continuation. The whole industry, I love their earnings, guys. Nothing bad to say about any of these corporate earnings on cybersecurity. I just don't want to pick and choose which one I want. So for that purpose, I may just go with the ETF here. ETF representing some decent diversification while not being overly diversified that one name doesn't make a difference, right? In here, if one name has a 12-15% day to the upside, it will make a difference on this index. So still looking good. The other one I'm looking at, guys, Expedia. Expedia, I'm going to start playing a little bit more aggressively, guys. We've been pretty much flatlined sideways since earnings for about the last 6 weeks. I'm going to start getting really aggressive with this lower end of this range, guys. 133, I'm going to start writing short puts next week. I don't care at this point. We are probably going for the gap fill. Expedia's fundamentals are just extremely juicy, and I don't want to miss this breakout, retest, and then run over the course of the year. So I'm going to be trying to play this one fairly aggressively. You know, Mercado Libre as well, one of the best earnings that I've seen this entire quarter so far. They are doing the exact same trade as well. Monthly uptrend, looking for the monthly higher low into a big area of support, right? You guys see the trades that I'm taking. They're just all basically the same trade. The daily as well, kind of looking to turn this around. And when this daily turns around, guys, your weekly lows are set, and then we're going to really be looking for this bounce play right here that can quickly bring us up $1,700. Would not be surprised. Mercado Libre, amazing stock. Love this one a lot. The one that I brought up yesterday on the channel as well, Vici, right? Vici's been trapped. This is a real estate investment trust play, right? One of my favorite in the entire market at this point. Obviously, it's not very favorable because of high interest rates, but they've been making an absolute killing in Vegas this year, and I do believe this stock is going to do very, very nice things here, guys. As soon as rates come down, it should be one of your outperformers when that happens. And down here, I mean, I've been recommending this stock now for a few months. It was featured in my top 10 value stocks in the month of October during the entire sell-off, and now we revisited that area. Same trade once again, right? Just looking for the monthly higher low and reset this monthly uptrend. So a little bit of a dip here. Still very, very attractive level, 29. Anything under 30 bucks, guys, love very much on Vici. The other one we were looking at yesterday was UPS. So UPS, a little bit of a sell-off yesterday, overblown, as I was saying. Now had some good recovery, 2.5% to the upside. Looking very good on UPS. But if the bears do take over, guys, I want to get a little bit more greedy on it, guys. I want to be playing short puts, 140 and below at this point on UPS. This whole 140 all the way down to about 135 range. Let's say they don't get through. Let's say the bulls aren't able to mount the substantial rally that they need to V-shape this. We may get a little bit more of trickle-down effect. I'll be looking to play UPS down here. Very, very juicy stock here, guys. Nothing wrong with the company. Nothing wrong with the fundamentals either. Looking very good for a trade down there. And the last one, guys, that I took here today, so CELH. So CLH is actually one that I took today. I wrote the $78 puts for next Friday, and I got about 65 cents for those. So CLH with a big drop here today, 8.5%. And I wrote these, I was watching this one all day, and I really wrote them towards the end of the day, so really was able to get the most amount of premium possible. What happened with CLH? Well, essentially, guys, they wanted to pay Pepsi more money for the outstanding job that they've been doing of promoting their products. So CLH, right, Celsius Holdings, the energy drink company, they have a distribution deal with Pepsi. So they get the best shelving placement. And Pepsi has been doing such a good job for them that Celsius basically said today they want to tip them. So how are they going to tip them? Well, they want to give them more kickbacks, more money, because they've been doing such a good job. Did Pepsi ask them to do that? No, not at all. Celsius literally just said, because you guys have been such good partners, we want to give you more money. So it was, it was very, very funny, right? Celsius shares slide after incentives added to Pepsi distribution deal. right? Shares of Celsius slid after the energy drink maker added an incentive program to its distribution deal with Pepsi. It had agreed to increase the average targeted margin on the sale of its products through the distribution network. So just basically offering Pepsi more money isn't going to hurt Celsius Holdings margins a tiny little bit, maybe a tiny little bit, but if they can get, Pepsi obviously has a number of different brands that are all competing amongst each other, and Celsius is trying to be the top dog amongst all those brands, trying to get the best shelving locations and whatnot. So Pepsi is going to continue to do a great job for them. In my opinion, it was actually bullish news other than the fact that it could potentially affect Celsius Holdings margins a little bit. But what they may lose in slight margins because they're tipping Pepsi a bit more with more money to do a better job for them, what they may lose in margins, I believe they're going to be able to get back in top line revenue growth, right? So it's going to be very good long term for the company. That being said, the reason I chose the 78 puts, very, very simple here, guys. Just look at the trend line, right? So all I was looking for was a dip below the trend line. I know 78 isn't really considerable support. The 12 EMA is all the way down here about 75, and a big previous area of resistance, even though it didn't last very long, right, is about the $68. I'm just very comfortable with this company, guys, at this point. So $78 for me, even though it doesn't really respect my strategy rules of looking for something being at support and whatnot, I just think the sell-off was a little bit overdone, and I gave myself about 6% more wiggle room if ever we do fall down to 78, right? If we do fall down to 78, that would be a very nice discount from the all-time highs, talking about, 22% discount from the all-time highs. And in recent history, since we've been in a bull market in 2023, that's about the extent that Celsius pulled back from highs. Take a look here, right? They pulled back about 25, 26%. Even from here, right? When you get dips, 20%, even this one right here, another about 20%. So a little bit of a dip here, 22%, 25%. I'll take that gladly, guys. And if for ever which reason we dip lower and come down to the $70 range, I will just average down into this stock. Still one of my favorite stocks for 2024 and 2025. Their valuation is not that bad. We did the valuations here after their earnings. It's not that bad. The multiple can expand a bit more, and gaining and closing above the $100 level over the course of this year would really not be surprising to me. So that's a bit of the logic behind the Celsius Holdings trade that I took today. I will show the position tomorrow in the portfolio update. So that's pretty much everything that I had for you guys today. Hope you guys enjoyed the video. If you did, consider dropping a like. Would really appreciate it for the channel growth, and consider subscribing to the channel if you're new as well. We would love to have you here. We do these videos every single Monday to Friday. In terms of your daily market recaps, I usually show my portfolio trades Monday, Wednesday, and Friday when we have a full week. And we also cover earnings recaps when it's earnings season. And as usual, guys, if you have any questions whatsoever, right, leave them down below in the comments, please, and I'll be happy to answer you. Since we don't have any major earnings to cover for the next 3 weeks, guys, if you want me to look at any tickers, definitely leave them down below, and I can take a quick glance and let you know what I would do them if it were my own portfolio. Obviously, it's not financial advice, but we'll do a little bit of a technical and slight fundamental rundown for each one of those. If I can do 2 or 3 of those per video at the start of every video, I'll be very happy to do that for you guys. So take care. I'll see you tomorrow, wrapping up a beautiful week. Hopefully you guys have had a good one so far. Take care and peace.